The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman on this Tuesday, the 1st of April. We're looking at the Dow down 336 at 41,666. Obviously, kind of worried about what's coming up. I don't think there's like a one-day solution. Tariffs are announced and everything's just great. It's an unfolding process. Not only that, there's retaliation. There are all sorts of things that are going on. So we've got to be kind of careful. We've raised quite a lot of cash, one of the highest cash positions we've had in quite a while. We're still shorted down the S&P. We did add this morning something in the cyclical area. That's the big heavy-duty stuff. Mostly because the chart has been acting very well, even though the company is not great, but we did it. We'll see if we're able to survive the day. This moment is fraught with anxiety, and you know that this market is very much like an elastic band. It's gone so negative that it just wouldn't take. It would take the raised eyebrow with a little grin to start a move to the upside. But you see that in bear phases, and certainly the daily and the weekly charts are suggesting that the monthly charts are still looking pretty darn good. But they are suggesting that you've just got to be very selective here. There are a lot of stocks I showed for subscribers to my opening call that we've got. There are many stocks that are holding well. Now, I should say there are some stocks in certain areas that have held extremely well. If they can continue to do that, that's a really good sign for them coming into the next phase of this market, which will start within a couple of days. So let's just see how this plays out. But let me go through these. So the Dow makes this H pattern, and I'll show you here okay. Oh, I didn't put it on. Let me put it on right now. So this is these are the techniques that we use, some of the techniques that I use in my huge, I call it the Sears and Roebuck toolbox, technical toolbox. Nobody even knows what Sears and Roebuck is anymore, but it's a toolbox. And basically, I look at three core patterns. One is straight up, straight down. That's one. Cup formation or V-shaped formation, that's two. Arch formation, that's three. And a mix of 1 and 2 and 1 and 3. Look, 1 and 3 is what we call the dreaded H pattern. It's only a dreaded H. If the left side low is taken, you come down, you make an arch formation. We've got a number of these. I'm just showing the Dow daily right now. But look what happened yesterday. It held beautifully way above the 40,661, 13th of March low. But this is a pattern that is unfolding. This is exactly the bar. The bar that accelerates to the downside is right here. So if today we start to see the down, now it's down 405. If it goes down, I would say even a little bit more, and at 2 o'clock this afternoon Eastern time, it is still very weak. Wow, you've got to be careful because it could quite easily take out the low of yesterday. Therefore, whatever is said, and we have to wait a whole day until 4 o'clock tomorrow afternoon, Wednesday, before we actually hear of whatever is going to happen. So, as I say, this is unfolding. Look at the S&P, the same pattern. Remember the dreaded H pattern? I'll talk about it a little bit in detail as we go through each one. Look. Here's the S&P, took out the left side low. Now, the theory for me is, so it went to a leg E to the downside, right, leg E. If within 2 sessions, I sometimes say it could be 3, but I like to be fairly strict. 2 sessions, after that, the left side low is not taken out. That says you can rally, not you, the price can rally to the next either moving average or a gap or a tiny doji candle, but it's probably going to stall at the arch high, in this case right in the 57, 70, 72 area. And let's go one step at a time. But if it takes out that left side low and closes within 2 days, but quite a bit below the arch low, that says you can go even 1-to-1 to the downside. You've got to be really careful with this pattern. Not only that, you see in the weekly chart, the S&P look at this. You've got the Chapman Wave inside track propellant zone, and the price held. I'll just show you this, how it works quite well in the Dow. Look, here's the Dow. INTU. Look how that held quite nicely. But here's the thing: if the S&P, so the Dow weekly chart is in a sell mode. That's just a designation of where it is. The S&P is in a sell mode. It's made even a lower low than that arch low. So that's a leg B to the downside. The monthly chart is still holding very well. Now we're looking at a new month. And that just says you had a doji candle at the 6147.43 high. And now we're going to watch closely to see how that 9-period moving average in the monthly chart acts, because if it starts to go below the 14-period moving average, that would take the price probably down to the 5,080 area. I don't want to talk about that right now. We do one step at a time. Let's see how we can survive the week with this daily chart, because it's already made the arch formation, the H pattern, and it's taken out the left side low, but it hasn't closed below it. All right. QQQ, same thing, 1, 2, 3. There we go. QQQ, the index 100, leg E to the downside. It failed at a peak B minus. That's because, let me put that in. And let me take away my Fibonacci. I like to just keep it there every once in a while to give me a pattern. But here's your arch pattern. And it took, I'll draw it in a little clearer. Arch pattern right there. There we go. Taking a little time today. I don't see any reason to rush anything, because this market at this particular point has a mind of its own. And all you need to do is you want protection. And for my subscribers, we worked very hard to keep that protection. Of course, I'm a little upset that I don't have as much on the way of the short position as the charts alluded that you should have. I don't have it, but that's okay. We've got a lot of cash, and we are short, so that's good. Now, what we're looking at in the QQQ, it closed below, went below, and it closed above the left side low of 467.01 in the QQQ, and now it's down 3.72 at 465. So that arch pattern says, be careful, because if it takes out in the next 2 days the low of a close, I don't want to say just takes out, if it closes under 457.33, that's a real problem. Let's go to the SMHs. SMHs trading took out the left side low, nearly closed below it. This is not a good pattern at all. And look at the weekly chart. Look at this large arch formation. Makes it, I've been talking about this for months. That 200.49 level, I think, will be taken out. It's a problem. And that's the semiconductor. That is the chips of the 2000s. Like oil was the engine of the markets throughout the 1900s and the 2000s. We've now got the chips, the microchips, as really the engine of market activity, economic activity, and it's starting to weaken. And NVIDIA, see, a little later today, maybe I'll get a chance, maybe with Jacob, we can talk about tides. When the tide turns, as it has, say, for a Tesla, there's nothing you can do until something absolutely dramatic and really extremely affirmative changes the pattern. And look at that 200-period moving average of 230. It just keeps coming down to it. So Tesla up 2 today at 261. But that's look at that monthly chart. That's a very ugly pattern. I'll be back in a moment. Dow is down 467. S&P is down 46. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Gold is up $9 at $31.59. Now, the on-balance volume, not the stochastic, which is fantastic at 92%. I love that. Not the MACD, which is expanding. Not the RSI, which is really strong. Not the 9 period, well over the 14 in the daily chart, and the price way over the 9. But it is the on-balance volume that is suggesting that there should be a little bit of a dip, just a little dip in gold. And remember, and someone said it in the den, I'm trying to find it. Was it Jimmy? Jimmy said, I think it was Jimmy. He said, am I in the wrong place? Yes, I am. Let's go back and see if I can find what he said. He said gold is, if I can find it, silver is a commodity. Silver is, I think he said something like silver is a commodity and gold is a currency. So I like that very much because in a sense, what I've been saying for not just a week or two, but ever since I've been on TFNN since 2002, I've been saying gold is the currency of fear. It is where geopolitically, geoeconomically, countries move quickly. Not quickly, they do it over a period of time, but each move is a very quick move because they want to garner as much as they can, get in as much as they can, and that's their safety net. It is in a sense, an insurance policy, but it is also a trend policy. So I see it very differently. And silver is a different kettle of fish. We got taken out of our silver stock. Nice profits, not anywhere near as what I thought it would be, but I raised the stock. I wasn't prepared to take any loss because it was not acting as well as it should. So we're out of that. So what's really important is that look at the GDX. So I was asked about the GDX. So I'm typing that in the wrong place. Let me see if I can do that correctly. GDX. So the GDX, the gold miners contract, you can see it's done really well. It's trading at 45.71, but that high that was made at 46.94 on the 28th of March, I'm watching that very closely because the MACD is turning down a little bit. The stochastic's now at 83%, still good, but it looks to me like it's starting to weaken. On balance volume is a little weaker, and the relative strength isn't close to where it was at that peak C1, C2 that was earlier in, say, mid-March. So I'm just watching this and I'm saying, okay, let's see what happens. I've got an alternate count in the weekly chart. The technicals are still very strong. On balance is a little overbought there. What's going on? And if you look at the monthly chart, look at this monthly chart, how it's met all the criteria that I'd drawn in. The only thing I had drawn in, and then I took it away, and now I need to put it back. So I like to get rid of anything that worked its magic and now is useless. So that's I didn't mean to add to it. I'm going to get rid of it. So now I want to do this real quickly because I've got a whole bunch of people lined up with questions that they sent me. Look, here's your time match, everything price. That's price symmetry that I talk about. Here's this large inside track repellent zone, became a propellant zone. But this is really what I wanted to put in here. I had it, and I can't remember why I lost it. I'm going to always, there's a particular candle that I go to. If it's so it's this little doji candle. I try to find, if I can't find a peak or a trough that's appropriate, and there isn't really a visual look that says left side should match the right side price time match from the high to the low, and then back from the low to the high. It did in a way, but I'm just going to do this now and see how that works out, because that'll give me a real good sense of what we're looking for in the GDX to either break out or pull back. And let's just see if that works. There it is. Okay. That becomes pink, and that becomes there. Okay. So that's good. It goes actually to next week, and we've already met it 1 week earlier, and the rising trend line. So this is good action for the GDX, but it does say that on a very short-term basis, we might be stuck in a little bit of a trading range between, say, 47.50, and I don't even want to go to the 44.62 low. I'm going to go to 45.14 just for the moment. So I'll just put that in. In fact, I'm going to make it even narrower. I'm going to say right there. So I'll put that in. We'll see if that works as some kind of a sideways. Where did that go? Okay, let me just put it in again. Okay, got it right there to there. Make it shorter. There. Okay, so this is what I'm looking at as some kind of a trading range just in the short term. All right? And most importantly, it's still acting very well. Look at the SLV. That's the silver chart. Silver chart stalled at a peak D. Remember the Chapman wave methodology? What are we always looking for? We try to identify the lowest low, count each successively higher peak. If it gets to a peak B, very often it goes from a buy signal to a buy mode, especially if it takes out B very strongly in the next C. So 4 higher peaks, peak A, then the next one's B, higher is C, higher is D. At D, other things can happen. But the buy signal upgraded to a buy mode implies that you should get at least 4 higher peaks in whatever medium you're looking at. All right? So we got peak D, then it went to E and an F mid-February, and then pull back very sharply, and it comes back, starts a brand new peak A, peak B, peak C, and now we've made a peak D. And I think we just due for a little bit of a rest right there. Okay, so what are we looking at? Silver should the 30.10 to 29.80 is really very important support, because it'll change the pattern if it breaks under that. 31.10 will be at least a chance that you're going to test the high that was made at 31.41 the other day. The monthly chart had a cup handled on one of my favorite patterns, but it's actually holding very nicely. So there's nothing wrong with it. It's just kind of struggling a little bit. And now you've got your weekly that had an inside at peak G, and now it's got a peak A, B, C. It's at a C, and in the rectangle formation. So silver contract, the iShares Silver Trust, is acting much, much better than some of the silver stocks. A couple are acting very well. I don't want to go through them right now. Tommy in his show, and he's doing the gold report now from Tom O'Brien, passed away tragically, and we miss him dearly. And Tommy's doing a great job, and he's got the report. So you'll get many more of the stocks in the gold and silver. So as we're looking at it now, nothing wrong with it, just maybe a little bit of a timeout. I wanted to go to high-grade copper, pulling back sharply from a peak D, second peak D. That peak D saw a pullback back in Feb. Now you've got another peak D at about 5.35. Pulling back is at 5.02, down 0.008. And the weekly chart still, I've got it as a C, so that's still positive looking out longer term. Let's go to crude oil. Crude oil right now is trading right at the Chapman Wave Inside Track repellent zone. I'm liking what I see on the short term, and it's telling me you got to be a little careful here because we're starting to move back into the area of energy. So the energy, the XLE stalled a little bit here. And one of the things I'd mentioned, I think it was yesterday or maybe Friday, that the XLE is doing very nicely. It's not breaking out, but very much like ExxonMobil, it's in an uptrend, but it's in an up channel and just working its way higher and then pulls back with a higher low and then pulls back again, moves up. XOM, look, here's XOM. This is ExxonMobil trading down 80 cents at a peak D, a leg D right now. Got to watch this closely, but you can see the monthly charts improving. I wanted to go to the bonds. So the TLT, just before we go to the break, nice move up. It's going right into the Chapman Wave Inside Track repellent zone. I'll be back. Dow's down 373. S&P's down 35. Basil Chapman, Tiger Commissions Hour. Be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
So I was talking about crude oil, but at the same time, I see in the Tiger YouTube that Jeff says, what about XOP? I looked at XOP in great detail over the last, this past weekend, over the last 24 hours, because I think it's important to keep monitoring it because crude oil is trying to break out. But look, the S&P oil and gas exploration, you see this pattern, this large arch within the big rectangle and having not taken out the previous high, failing at a peak C, and it hasn't failed yet, but it got to a peak C and then it declined. Look at that pattern. Keep your eye on that pattern. Now look at this weekly chart and have it tell me if you see any similarity. Look at that. It was there for just long enough for you to see the two together. This is the Van X Semiconductor ETF. I was talking about that. It's arched over. Doesn't this pattern look very much like this pattern here? So I'm kind of nervous about the XOP oil and gas exploration. So I decided not to do anything there. And so far I haven't done anything yet for subscribers to my opening call in the oil sector. So now I've done my overview. I need to just two quick things. One is Bitcoin. Bitcoin, not quick, but Bitcoin is just failing. It's got to the Chapman Wave inside track repellent zone at a peak D. It's pulling back in the daily. Peak E at 110,975 made the dreaded H pattern, the arch formation. Took it out and it's done a 1-to-1 to the downside. Peak D in the monthly. I think this is a bit of a problem right now. And until Bitcoin's trading in the, what did I say yesterday? I think I said in the 1,000 to 92,000 area. This is just stalling. It's just not going in. It's not breaking down yet, but it's not doing very well. Okay, that was in there. And then the VIX index, one quick thing with the VIX index. So the VIX index is trading up 63 at 22.91. This whole action pushing away from the 200-period moving average with the MACD so close to turning positive, 0.03. Look at that. It's really close to stochastic grounding. I'm watching for the next couple of days because if after the tariffs are announced on Thursday, the market responds, because it's Wednesday at 4 o'clock Eastern time after the market closes, if the market just does not like it, we can have a horrible Thursday into Friday, going into just a gruesome Monday. That could be the kicker for a real start to something that is from much lower down. So when you get those V-shaped patterns in some kind of a massive waterfall crescendo to the downside, cascade, sometimes you just come back to where you were a few days ago, but it's been horrendous and everybody's got out of everything, and now the market's starting to rally. I don't know about that. All I'm saying is if it rallies from here without that climactic low, I'm anticipating we come back down. And what does that mean? It means that this pattern here is a viable pattern. This is the Chapman Wave methodology, talking about the Chapman Wave dark news, boys, the dark news index, the DNI. And we've made an internal low, and this is the inside track propellant zone in the daily chart. I used the Dow for this particular index that I developed decades ago. And what I am looking at is this is very important that it holds, because if it takes it out, we have to consider that something else is happening and that it's going to impact not just the weekly charts, but start to impact the monthly charts negatively. That's why it's very important. Price is the arbiter now of the trend. It's not just the technical tools, because if the prices start to move, now the technicals will follow. But right now, most of the technicals are pretty bad. Okay, now questions. First one that came in was STZ. STZ from... hit the wrong button, of course. STZ it was one of the top distillers, the Constellation brands, liquor, cannabis. Remember, this goes way back to where I was talking about. We've never actually owned it for some reason. I followed it for years, but I have to redo the notation here. But when it made that high, I said, it was on that rebound. I said, one of the great companies that, look at this 9-period moving average. It just never turned pink. It was just unbelievable. I said, one of the great companies that just knew exactly how to handle the liquor and everything, the alcohol business, just went into the cannabis sector. I think they've got a huge learning procedure that has to go on from here, and I'm very worried about it. Well, it tanked from I don't know if there's a split or not. Maybe that's the reason why I lost that. So it goes from 236.6 to April of 2018. Well, isn't that interesting? I would say that's 7 years ago, right? Down to the low of 104.28, March of 2020. Relative peak D, pulls back, goes peak A, B, and then under it an A, B, and then it goes C, and finally a D at 247.75, and that is, it loves April of 2024, and it's come down now sharply. So Jason wants to know, he says, is showing, can you look at STZ on a show for a long? From a fundamental valuation, the stock hasn't been this cheap in years. It looks to be at a peak C daily. I'll go back to that in a moment. Peak C daily. But nothing really is going on. So now, remember, I was talking about when you're in, you're in. When you're out, you're out. Tesla is out. It's going to take a lot for it to regain and recoup the credibility that it had. I don't want to go into that right now, but what I do want to go into, SDZ was in the out. I'll deal with something in a moment that I keep getting asked about, and I'll do this. Palantir has on the shorter term, it was on the ins, and now it's on the outs. When you're on the outs, everything that worked before just somehow doesn't work, because when the tide is moving up, remember when you throw a piece of driftwood into the water, if the tide is going out, that driftwood cannot come to shore. It just gets pushed out. When the tide is coming in, no matter what happens, you can't get that to go out. That's just the way the tide is. So I'm looking at this and I'm saying the tide for these certain things has its ins and has its outs, and STZ is on the out. I don't disagree, but there are a lot of stocks that are extremely, in terms of valuation. Now, because it's in the liquor business and because Canada's, the Canadians, as I read it and as I've read it over the years, can be really unified when it's one thing that they're really either pushing for or against. And in this case, I think what's happened with the liquor, it's going to take a little while for everything to ease up and for the liquor to come back onto the shelves. So, and it's got the cannabis, and the cannabis, if you look at the MJ, which is the cannabis ETF, alternate harvest ETF, it was once up in the, it was once up in the 400 and something area. It's an ETF, so that always shrinks. But look at it right now. It's at $19.49, and that's after the 10-for-1 split. I think it was from 2 to 20. So I'm just going to, the break has come up. I think we're going to have a bit of a rally in the market right now. So let's just do this. I'll be back. We'll just sum up this STZ, then we're going to look at natural gas. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
How about if we're back? So let me just show you this. I have a lot of Chapman waivers out there. Look, you see I put in a red, pink, peak C right there on the 1-minute chart of the E-mini. And it went to a parallel high. So what I do, because I got a little ictus right there in the technicals, so I put it as a peak C, saying if I get to a D and pulls back here, that's something I can expect. But if it goes to a fractional new high, what happens is that gets put into D, there it is, and there, I keep the red just as I had used it, but invariably a phantom peak goes to a D. And now we've got that D way above the 200-period moving average. Whatever is moving the market right now, it's very selective. The Dow is still down 221. Remember, just now it was down 400. And the S&P's come back to just minus 11. So this morning I thought about it really carefully. I said, the Dow's down right now. If we bought, say, just the Dow or one of the indexes for a trade, and it rallies very nicely into the close in anticipation of something tomorrow, and then tomorrow somehow you can hold all the way through the day, and then on Thursday the market actually doesn't crash. In fact, it has a pretty decent rally. You're in at a low. And then I thought about it. There's time, because if we get a low of a really substantial low, in the sense that there's some relief, and it's a relief that says to the market, you know what, you can at least bounce for a week or two, then that's something else. You'll have plenty of time to get in, even if it's up 500 or 600 points. So in the meantime, I just wanted to explain that to you. So I still keep the pink C, and it goes to D. Then I expect some kind of a pullback. Now let's go back to our story. So STZ, I'm going to make the suggestion that STZ, because you've done your homework, Jason, I'm going to suggest, why not? It's not doing badly. Look, right now it's up 83 cents. Why not just start a little position right now at 83, and you could add to that position at 187.50, and it's trading right now at 184.35. And if it takes out 4 points, is not a big deal. If it takes out 181, or let's call it 180, you're just out of it. Let's do that. That's the way I would do it. Why? Because there's nothing wrong with the charts. A great question just came in. Now, I like to go in order, but I'm going to do this because it's a good question. Basil, what would you do without fundamental tariff knowledge? Purely technical, would you buy this dip now or expecting further and bigger downside based on technical formation? Thanks, Kevin. So I like that question because this is a question that I pose to myself every day just about for the last couple of weeks. And all I can say is this, that on a purely technical basis, if there wasn't the tariff potential for a tariff war, and that's never a good thing, just initially, maybe it sorts itself out, I would have said at that 200 period moving average right here at 42,018 in the Dow, when it got there and it broke above, I would have said that should be the start of a pretty decent rally. And the weekly chart did turn down, but that 9-period moving average would actually be a little bit better. I would have said now we can have a pretty decent rally, but I don't think we would have gone down as much without the tariff fears. It is a serious thing because it's affecting not the autos, but it's everything that has to do with the core economy. So for that reason, I'm just saying to you that I would have had a lot more positivity, and I wouldn't have got out of a lot of positions because they would have been holding pretty well. But we took decent profits, and now all I'm saying is that I have to consider the tariffs are a factor. It's like another technical factor. So on a purely just visual basis, we held that beautifully. Look at that. And there's a red Chapman wave Roman candle. We've been inside it. We've been above it. We've been just below the body, but we haven't taken out the wick. So all of that is really positive. But there's an outstanding component that is a little more than just a little kind of, well, it's not a big deal. So the STZ I dealt with. I'm going to give you another one, which is BF. And this is, I forgot, BF.B. This is B shares. This is Brown Foreman. And I can't remember, but I think they're in the same kind of areas. It says BF, another one that owns Jack Daniels. On a recent earnings call, the company said they don't know what will happen with tariffs, but believe they will be able to navigate around it. I prefer STZ, but the whole sector has been weighted down. I would rather go for something that isn't in this weighted down area. There are a lot of things that are just anxious to get moving again. So I'm just going to, look, Procter & Gamble. Look at the way it's acting. It's down today a little bit, but it's holding well. Colgate-Palmolive, holding well. And then there's some of the commodities. So I'm just saying to you, I'd stay with STZ, and I'd do exactly what I was discussing. Just kind of a nibble right there. Okay, next thing was natural gas, NG. Natural gas right now is trading down just a little bit, down 10 cents. I don't like this kind of candle, long wick. It's like a dragonfly, it's kind of ish, but you close at the low, and over the next two sessions, you don't even get halfway into the wick. But the high of natural gas is the continuous contract is trading at 4.95 on the 10th of March, and here it is at 4.018. If you look at the UNG, which is the actual trading vehicle, United States Natural Gas Fund, you can see that it's had a nice pop up to a peak A. I usually call it a gray A because it hasn't had any technical veracity, and now it's under that. I would be careful. I looked at it very closely the other day because I thought, natural gas. In fact, we had something in the natural gas area that should have worked well, and it didn't. We just got out as quick as we could. And I'm just saying to you, I'm a little hesitant. I'd rather be buying the natural gas. The weekly chart is great. The monthly chart is horrible. It depends on your time frame. And this daily chart, what's the time? I don't want to run out of time because I've still got a lot of other questions. So look, here's your falling axe formation. Let's just do it like that, be generous. I'm just going to say I'd rather look at natural gas if it can rally above 22, UNG, if it can rally above 22.40. 22.40, I'd start a little bit with the chances of adding to it only if the 9-period moving average actually starts to cross positive. It's pink right now. It needs to go green above the 14. The MACD's got this the W-shaped pattern, which says if it rallies, it could start to see the histogram improve, which is improving right now, but not enough. So I'm just saying I'd be real careful right now of a position other than Basil, KOLD. Well, KOLD is exactly the same chart. Ultra short. Bloomberg natural gas. Oh, in other words, you're looking at the same thing that I am, that that natural gas is kind of stalling here. This is too dangerous. And if you think of it in terms of trades, this is the 9-period moving average just went negative. It's trading at 20.73, up $1.16. It's a little too dangerous. No. I'm just saying I can't see anything. I can see maybe tomorrow, but right now I don't see anything on the long side. I'd just be careful. Next thing I'm looking at here is question. We did that. Next question was somewhere over here. Oh, got a break coming up. Oh, that's right. What about the defense stocks? Not defensive, but defense. Look at the RTX. It's kind of stalling. GD, General Dynamics, acting much better. Oh, I'll talk about this when we return. General Dynamics is the one that's doing much better. I'll be right back. Dow's only down now 183. S&P's down 7.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So let me just say this before we wrap up. If the E-mini, which is now unchanged, actually has come back to, it's actually up $1.25 at 56.54. If there's an anticipation that things are going to look pretty good, this is a day early. We've got the whole of tomorrow to go. So maybe it rallies again tomorrow. But all I can say is that if the E-mini can crack, it's at 56.56. If it can crack 56.80, by 1:30 or 2 o'clock this afternoon, that means that the market is anticipating that there's going to be a good result coming up. So that's what I'm looking at. If it plunges back under 56.20, it's at 56.57 right now, that just says, uh-oh, that little rally was a big mistake. But I think people are looking, and that's to answer Kevin's question. I would have been really positive at this particular point if it was for the tariffs, only for a really strong bounce, not just a 1 day or 2 day bounce. I'm talking about a real bounce. So we'll see. The market is like an elastic band, just waiting to go. So a couple of things, just as we're wrapping up. Yeah, Uber's holding quite nicely. Oh, what was I looking at? General Dynamics. Yeah, that's working its way towards the 280 level. It's at 273, around the 200 pre-moving average. So with that said, just to sum up, we've raised cash. We've got positions that have held extremely well. Question came in about SOLV, which is one that we've got. Solventum is holding very nicely. I didn't want to get back. Well, we're in it, but we have trading positions as well. We're in it from much lower down. This is very selective. I want to see what's running today by the end of the day, and that's going to say, hey, let's see if Palantir is actually starting to work. Palantir is down just a little bit, now down 4 cents. So we'll see what happens. Give it time. Don't be in a rush. There's going to be plenty. If this market is going to move higher, there's plenty of time. Stay tuned for Steve Rhodes. Check out my Opening Call Daily newsletter, and I will see you later with Jacob at 3 o'clock.